Hello, everyone. My name is Moe and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we talk about this exciting dividend play, I want to let you know that investing comes with a lot of risk, and no matter how safe an investment sounds, there are risks involved. Anything you see in this video is for information and educational purposes only. To read more about risk involving investing, please see the description below. When it comes to dividend investing, usually the concept is you buy a stock or real estate investment trust or ETF that pays a dividend, and that's all. And you continuously get dividend payment. But there's more to it than that, just that. You also have to make sure that the value of the stock you're buying also goes up. If it doesn't, then the point of dividend is usually useless. So today we're going to be talking about this exciting dividend play that John recently profiled in IncomeInvestors.com. It's called Antero Midstream Corp. It's traded on New York Stock Exchange under symbol AM. John?
Yeah, thanks, Mo. Yeah, there's no point buying a super ultra high yield dividend stock if the shares are plunging. You're just going to lose everything. And that's where Antero comes in. As the name implies, it's a midstream company that owns and operates energy assets, servicing gas production in two of the lowest cost natural gas and natural gas liquid basins in North America. This includes the Marcellus Shale and Utica Shale. Both are in the Appalachia regions of Pennsylvania and Ohio and West Virginia. The Marcellus Shale is an unconventional reservoir that produces natural gas liquids, and oil. And most people don't talk about the Marcellus Shale, but it's also the largest, most prolific unconventional natural gas reservoir in the U.S., responsible for around 35% of total U.S. natural gas supply, and its current inventory is in excess of 20 years. Now, some people might say, why natural gas? Oil is more exciting. What people don't tend to realize is that natural gas is used for more than just barbecues. Right. It's the largest source of electricity in the U.S. and a major source of heating around the world. So that's why Antero has a major play there. And it operates through two segments: natural gas gathering and processing and water handling. Antero Midstream provides its services to Antero Resources, which is the second largest natural gas liquid producer in the U.S. And it's under long-term fixed service agreements and provides processing and fractioning services through a 50-50 joint venture with MPLX LP, which is also a limited partnership. The company's gathering and processing segment includes 494 miles of gathering pipelines, 3.9 billion cubic feet per day of compression capacity, and 40,000 barrels of natural gas processing capacity through its MPLX joint venture. Its freshwater pipelines and storage facilities support the operations for Antero Resources. What most people don't realize is that water is a major component of the oil and gas industry and is used in all stages of production, extraction, development, etc. So it's used for drilling, washing, processing. So it's imperative that oil and gas companies have access to reliable water sources. Antero Midstream uses mobile blending facilities to treat and recycle produced water. The treated water is blended with fresh water and transported via pipeline directly back to pad sites. And the company's water resources are massive. It includes 35 miles of freshwater pipelines, 18 million barrels of freshwater storage, and 100,000 barrels per day of wastewater recycling and reuse capacity. So it's a massive infrastructure.
John, that's some solid insights into what this company does and its operation. Now let's talk a little bit about how it's doing, because oil has done extremely well over the past 2 years, and I'm assuming the numbers are looking good here as well.
Yeah. Thanks to the company's long-term fixed agreements, it's been helping the company report really strong financial results. In the first quarter of this year, revenue increased by 19%. To around $260 million. Net income increased 7.5%. Adjusted net income was $100 million. Earnings per share were up 11% at 21 cents per share, and adjusted EBITDA grew 16% to $242 million. Free cash flow before dividends was $154 million, 119% increase compared to the prior year quarter. Free cash flow after dividends was $46 million, and that's compared to a $38 million deficit in the prior quarter. I think it's important to keep in mind and remember that this is the third consecutive quarter in which the company generated free cash flow after dividends. Most significantly was the fact that free cash flow after dividends improved by $84 million from the first quarter.
John, I was also reading that they raised their full year guidance.
Yeah, for 2023, Antero expects to report net income growth of 15% in the range of $355 million to $395 million. Adjusted net income growth of 15%, to a range of 410 million to 450 million. Adjusted EBITDA in the range of 950 million to 990 million, which is up 20% over prior guidance. And free cash flow before dividends between 550 million to 590 million, which is a 35% million increase at the midpoint from prior guidance.
And now let's dig into the fun stuff that we always talk about here. Dividends. How are dividends doing here?
Yeah, income hogs, they can't be anything but happy. Again, thanks to the company's long-term fixed service agreements, Antero Midstream has a steady and reliable revenue stream and cash flow. In April, the company's board declared a cash dividend of 0.225 per share or 90 cents per share on an annual basis for a current yield of 8.5%. Antero actually has a long history of providing an ultra-high yield dividend with a trailing annual dividend yield of 8.5% and a 5-year annual dividend yield of 12.07%. As expected, because it works in the energy industry, the payout can fluctuate, but thanks to its strong cash flow, chances are good it will increase its payout over the coming quarters. Yeah, and Antero Midstream stock is doing quite well too, rising approximately 7% since reporting strong first quarter results on April 26th. It's also up 13.2% over the last 12 months.
All right, John, thank you so much for providing great insights on Antero Midstream Corporation, traded on New York Stock Exchange under symbol AM. Just to recap, Antero Midstream Corporation continues to be an excellent energy stock with strong balance sheet and has a great history of paying high dividend over time. And remember what we said earlier, you don't just need a company paying dividend, you want the stock price to go up as well. AM stock has good outlook going forward, and it's not just us talking about it. Wall Street analysts have similar opinions as well. Thank you so much for watching this video. We'll be back soon. In the meantime, please like our video and subscribe to our channel. We'll see you soon.